The next set of account is what is known as contract account. This is a specialized account used in construction related businesses. This is so because the period of executing contracts are usually longer than a financial year. Even with short-term contracts, cost and revenue are identified separately. Hence, account is maintained for each contract separately. Expenses and assets used for the contract are debited, while balance of assets and material at the end of the contract are credited so as to determine the cost of work done. The provision of SAS 5 in determining the amount of profit to be recognized in an accounting period subsists. So it's the provision of SAS 5 that is used in determining the amount of profit for an accounting period. Now, the cost of work done can be divided into two: cost of work certified by the architect and cost of work not certified. It is the cost of work certified that is used as a basis for collection of progress payment from the contractee, or the person that gives the contract to the contractor. Okay. Now, the SAS 5 gave two methods of accounting for contracts: fully completed contract method and percentage of completion method. Fully completed method is used where the contract has reached a reasonable stage of completion. It's almost concluded and the profit can be determined reasonably well. The percentage of completion is used where, although the contract has reached an advanced stage, but it has not actually reached a stage where you can fully estimate, where you can fully determine with certainty the profit that will be realized from the contract. The percentage of completed contract, the percentage of completion method, divides contracts into 2 or 3: the just starting, the almost completed, and then the advanced stage of completion. The profit recognized under the percentage of completion method on a periodic financial statement, in the periodic financial statement, is based on the proportion of the contract executed. That is a kind of percentage of completion. That's the basis of calculation of profit. The profit is recognized each period and is taken into the financial statement. Now, the profit can be determined in any of the following ways. Firstly, you have the cost of work completed to date over estimated total cost to completion times the total estimated profit. That's the profit to recognize in the account for that period, or the value of work certified over total contract price times estimated total profit. The estimated total profit is the total contract price minus cost of work to date, and then estimated cost to completion That's the total cost, and this will give you the estimated total profit on the contract. So the profit to be recognized per period is based on this formula. That's the percentage of completion method. The completion method, the completed contract method in its own case, is used for short-term contract as well as long-term contracts in which the profit cannot be estimated on the whole contract. In that case, no profit is recognized in the financial statement and everything is deferred until the contract is completed. But in both of the methods, where it is emphasized that the contract will bring about a loss, it should be provided for immediately in full, irrespective of the stage of completion of that contract. Now let's look at this simple illustration. Goodwill PLC undertakes a variety of construction. On 1st April 2001, the company won a contract of 850 million naira over a period of 3 years. The contract commenced immediately on 2nd April 2001, and the following details are available as at 31st March 2002. That's a period of a year. Material purchase, material transferred from another site, and then we have materials on site not yet used, direct labor accrued, indirect labor accrued, plant delivered to site, hire of equipment, hire charges of head office charges, cost of work done not yet certified. Okay. Goodwill PLC has received payment of 155.55 million, which represents work certified as completed by architect as at 1st March 2002, less a 15% retention. The company takes credit for profit on the percentage with the contract value, and the architectural work done to date bears on the total contract price. You are required to prepare the contract account for the year ended 31st March 2002 together with a calculation of the value of work in progress. Okay, let's see how we're going to go about that. Like we discussed in the note, a contract account is a T account. The expenses and the assets used for the business is debited. So for the contract rather, let's find that out. We have materials 76,500, 2,300, material 76,500, and we have 2,300 materials again, transfer from materials on site not yet used, as at the end of the period materials carried down $3,800. Then direct labor accrued 44,800, 1950. Direct labor 44,800 plus 1950. That's 46,750. Confirm it, please. 44,800 plus 1,950. That's 46,750. Okay. We have indirect labor accrued 64 plus 240. That's 6,640. $6,640. Then we have plant delivered to site. Plant delivered to site 12,000. Then hire of equipment 57, hire charges owing 320, hire 57 plus 320, and that's how much? 6020. Then we have head office charges 4800. Head office charges 4800. Cost of work done not yet certified, it's 600. Okay, normally we have to have, since there was a plant that was delivered to site, there should be the balance brought down of that plant. But if we don't have it, we go ahead and work, assuming that the contract has taken the plant as a whole. Okay, now the difference between these two sites represents the cost of work done to date. Okay, now this cost of work done to date is divided into two: cost of work certified and cost of work not certified. The two will make up the cost of work done to date. So let's look at the account again. We were given the cost of work done not certified, so in that case it's going to be 8600. So the balance will represent the cost of work certified. Summing up everything, we have 76800 plus 2300 plus 46750 plus 6640 plus 12,000 plus 6020 plus 4,800. That's 155,310. As the balance here, 155,310 minus 3,800 minus 8,600. That gives us cost of work certified to be 142,910. So you bring it down, cost of work certified 142,910, and then you find the value of work certified. The value of work certified is usually represented by the architect's certificate. Now, goodwill has received progress payment of 155.55 million, which represents work certified as completed by the architect as at 31st March 2002, less a retention of 15%. So the value of work certified by the architect is this progress payment. This progress payment is that value less 15% retention. So to get this whole amount, we have to gross it up. This means that this progress payment is 85% of the value of work certified. So the value of work certified will be that amount of 155.5 million, 0.55 million times 100 over 85, and that's how we're going to get the value of work certified by the architect, and that is 155,550 times 100 divided by 85, and that's 183 million. So the value of work certified is 183 million. We compare with the cost of work certified to get the apparent profit. So that's 183,000 minus 142,910. So the apparent profit is 40,090. 40,090. That's the total profit. Now the profit taken in the period, each company would have its own policy. Let's look at the policy of this company. The company takes credit for profit on percentage of the percentage which the contract value and architectural work done to date pairs to the total contract price. Okay, so in that case the profit taking will be the total apparent profit, times value of work certified over total contract price. The value of work certified is 183,000 over total contract price is 850 million times 40,090, which is the apparent profit. So times 183,000 divided by 850,000. So the profit taken is 8,631. 8,631 profit taken, and the profit suspended is the balance 40,090 minus 8631. That's 31,459. So that's the account. 183,000. So that's how the contracts will be accounted for.